Hi there, Holly Shields here for Kalkine Media. Let's talk about AGL Energy. Is it a good dividend stock? But before we get into it, please give our channel a sub and press that bell icon to get notified on our latest videos. Founded in 1837, ASX-listed AGL Energy is involved in generation and retailing of electricity and gas for residential and commercial use. The public company has a substantial portfolio of wholesale energy contracts and assets to support its retail customer base of over 3.6 million. In the last 5 years, the annualized growth of the $5.68 billion firm stood at 2.5%, while industry growth was 3.34%. According to AGL, it targets an payout role of nearly 75% of the underlying profit after tax, where a minimum franking level of 80% can be maintained. On the 13th of August 2020, AGL launched a special dividend program for the financial year 21 and 22. Under the special dividend program, AGL anticipates paying a special dividend of up to 25% of underlying profit after tax, thereby augmenting AGL's dividend policy payout ratio of 75% to take the effective payout ratio to 100% of underlying profit after tax over this period. The company also said that it aims to bring down the line of franking on the dividends to zero in financial year 21 and 22. AGL believes that this temporary reduction would help it return to generating franking credits from underlying earnings as the yearly financial year 23 interim dividend. The AGL share price was trading at 9.29 Australian, down over 23% year to date. The stock has given a negative return of over 46% in the past 12 months. The 52-week high stands at 17.75 Australian, while the 52-week low is 7.96. The ASX 200 Utilities Index fell roughly 22% during the past year. Thus, it has been a tough year for AGL shares, mainly due to conditions in the country's electricity market. Low and unstable electricity prices and the looming closure of the Liddell coal-fired power plant are not helping much. The shares were also negatively impacted after the CEO's sudden exit in May of 2021. Earlier in March, the company announced a restructuring plan. Under the setup, the company planned to split into two companies. While new AGL was to house its electricity retailing business, PrimeCo was to hold AGL's electricity generation business. However, the company's shares had fallen nearly 20% following this announcement. With that in mind, just as with any stock, be sure to do adequate research before investing. Well, if you like this information, please like, share, and comment on the video, give our channel a sub, and while you're at it, press that bell icon to get notified on the latest videos. For more regular updates, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkine Media.